So we're talking about the ideal pullback ratio, the ideal pullback depth in order to take a continuation trade. Now we trade in the direction of the trend, so we're looking for pullbacks to give us those trading opportunities. And a member mentioned something that I think is good to review. So we're going to take a look at this with this additional feature that this member brought up. But before we do that, I'm going to recap a little bit in case you're just joining us here. So let's get rid of everything on the chart. All right, so there's no indicators on the chart right now. And we're simply looking at retracement levels. We're looking at pullback depths. And the question is, what is the best pullback depth? Now, I have something called a Fibonacci window. This, to me, is the ideal pullback depth. And if I apply my Fibonacci retracement tool, we can see that I've got it marked out. This little green window is my retracement window. These levels are the Fibonacci levels. This is the 38.2 and the 61.8. And the line in the middle is the 50% level. Now, when we take a look at a pullback, what we are looking for is the market to pull back to approximately that 50% level. And this is where my pen tool comes out. So I'm looking for a market to move in one direction, and we get a top and we have a bottom. What I'm looking for an ideal pullback is a market move to approximately this 50% level. So when we get a market move to this 50% level, and it's going to be a zone, it's going to be basically in here. When I get a pullback into there, I'm going to start looking for the opportunities to take a trade. So let's go back one. So what I'm looking for is this space in here. Now we're going to divide this into three. So we get a market move in one direction. Let's say we've got this market move right in here. We're going to divide this into three sections. All right. So we've got section 1, section 2, and section 3. And what we're looking for is a pullback into this middle third. So we've got this broken down into thirds. So we've got a top third, middle third, and the bottom third. And we're looking for a pullback to that middle third. That is the ideal pullback. That's the one that I am looking for. And we're going to find that most of the time when the market pulls back and continues in the market direction, we get that pullback into that middle third. And we can see that here. Market pulls back into the top part of that third. I mean, this could be the third right in here. And then the market will bounce. And again, we see that in here. We have the market moving up and then pulling back into that top third, and then it continues. And the comment that was made was there is somebody, a popular individual, telling us that the 78.6% retracement is the ideal retracement level. So what I want to do is go through the charts. We're going to take a look at several pullbacks, and we're going to see what is better. Is it the Fibonacci window that I use, that I have been using for years, or is it a more aggressive pullback, the 78.6? Now, before we even get started, I just want to say, if you throw any random number as a pullback, a percentage pullback, 94.8, for example, occasionally you are going to find a pullback that gets there. What we want is not an occasionally it works. We want a it usually works kind of thing. So what I found over the years is if you have this market move up, and you've got your third, and the price retraces to below that third. I mean, it could kind of poke down below it a little bit, but if it gets substantially below that third, chances are that pullback isn't so much of a pullback as it is going to be a corrective thing. And market is going to generally want to change direction. So we get this big pullback, and if we do get a bounce from there, being lower than that 61.8 level, what we'll see is the market may bounce, but then continue to move down. Now, this has been my observation over the last 20 years. And today we're going to take a look at that and just see if this is the case. So let's get rid of this. And from here, I'm going to throw on my Fibonacci tool. So we've got this Fibonacci retracement tool. And like I said, I've got it so that I have it set up in a way that shows me that midsection. Now, if I double click on this, these are the settings, the 38.2, the 61.8, and that 50% level. That is the green line right in the middle. And underneath this, we've got the 78.6. So that is the 78.6 retracement. All right, so we've got that applied to the chart. And that's what this line is right here. So we are almost at an 80% retracement. If the market has to move 4/5 of the way back there's a good chance that it's just going to continue to move. So let's take a look at a handful of examples and we'll see. Again, sometimes that 78.6 is going to work. Most of the time, the price will not retrace that far unless we're looking at some kind of a reversal. So let's check this out. We're going to start with this move here, and then we'll just go backwards. We'll start with this move from the bottom to the high. And what we're seeing is, yeah, we do get a pullback, and that is very close to that level. Now, it doesn't quite get there. Now, this pullback to me is a little bit aggressive. It drops below that 61.8 into that bottom third. So I'd be a little bit suspicious of this particular pullback. Now, again, it almost does get to that 78.6, but let's take a look at a few more. So we'll go for the next one. So if I go from the bottom to the top, we can see that we get to that top part of that Fibonacci window. And that's exactly what I'm looking for. I'm looking for it to bounce off the top, get into it, or bounce off the bottom of that Fibonacci window. And we see that works out perfectly in this case. Once I get a signal to go long from here, I would not be too hesitant to do that. The pullback is what I would consider to be a perfect pullback. So let's look at that on the next market. We start at the bottom and go up to the top, and that's right here. So we've got the bottom up to the top. Price pulls back into that Fibonacci window and then continues to move up. Now the market dies off here, and we got a very slow market right now, but the move out of this bounced from that zone. All right, so let's take a look at some more market moves. All right, so we've got a couple of moves down here. We have this market move down and then a pullback. So let's see if this is something that we could take advantage of. Again, we get this market move down and this pullback into that Fibonacci window. And then from there, the market continues to move. Now we get this nice big move and we get a small pullback. So I'm going to mark that off from the top to the bottom, and let's take a look. Now we don't get a pullback into that Fibonacci window, and what happens is, because we've got this nice big move and a very small pullback, the follow through after that pullback just isn't very far. This would be a difficult move to trade if you're going to make any money. The market just doesn't move very far on this one. And let's take a look at this. We've got a couple of more examples of a pullback. So let's take a look from the bottom to the top, and we'll go from the bottom to the top. And again, we get into that Fibonacci window, missing that 78.6. It does not get to that 78.6. And if I'm waiting for that 78.6 to be hit, I am going to be missing almost all of my trades. And that is not something that I want to do. All right, so we get this next move from here to, well, let's start from here to here. This is the first move, and we see there's a pullback that happens. So let's go from the bottom to the top, and we get to the top of that Fibonacci window. Now this one pops up just a little bit, so let's extend it to the next one and throw this out to the side. And here we get that pullback right to that 50% level. It is in that Fibonacci window. This one is a beautiful one. And let's try the next one. So we get this pullback from here to here, and this is just a smaller move. So we get that pullback again into the Fibonacci window. Now let's extend this up just a little bit more to cover this top. Once we break through that 78.6 or break into that bottom third, that market just continues to move down. We see that there is that breakthrough and the change in momentum. We're looking for a pullback that doesn't change the market momentum, that doesn't change the direction that the market is going. And we can do this all day long. So let's take a look at, we've got a market move up. Let's kind of work in this little area here. So we've got a market that moves up, pulls back into that Fibonacci window, and then continues to move up again. All right, so we've got a market that moves down, and here's an example of something. So we get this market, well, let's start from this one. We got this high to this low. So let's take a look at that one. So we go from the high to the low. The pullback into the Fibonacci window has the market continuing to move down. So let's go from that high to this low. Let's just zoom in a little bit. There we go. So we've got this high to this low, and stretch that out. Now what happens is we do get to that 78.6% level. The market does make a small move back down, but what happens ultimately is the price reverses and continues to move up. What we're seeing when we get to that 78.6 is a shift in the momentum. We've got this downward market shifting to an upward market. Now we don't have a change of character just yet. We don't have this high being broken, but we have the implication. It implies that that is going to be the case when we get into this top 20%. Market gets into this top 20, this top 30%. And then from there, we're seeing a shift in the market momentum and the price takes off. And let's take a look at some more. We can do this all day. Here's one that works exactly the way the 78.6 works. We'll start high and we'll go low. And what we see is we get a move into that 78.6 and then it reverses, it pulls back, and we see that nice continuation. Now, this is the first instance where this has worked. We've seen a dozen other instances where it doesn't get to that level, but it still continues to work out of that Fibonacci window. And again, we'll go from the high to the low and throw that out to the side, and we get into that Fibonacci window. Again, we're just looking for a bounce off of the bottom, in the middle, off the top of this Fibonacci window, but we're looking for the price to retrace into that area. And again, we can do this all day long, and we can do this on any currency pair, any chart. And what we see here is a market move down. It touches the bottom of the window, does that a couple of times, touches the bottom of the window, forces its way down, pops back up, gets into the bottom of the window. Now, if I were to extend it to include that wick, we just sneak inside the window. But ultimately, we end up moving back down, and that market continues because the pullback isn't so severe that it starts to void the momentum of the original market movement. We can do this all day. We can do this all day long. Start from the low, go to the high, and we get into that window, and it ticks through it a little bit, but then it bounces off. The market continues to move up. From the low to the high, market bounces off the top of that window and continues to move up. We've got the low to the high, market gets to the window. Again, it ticks through it a little bit. Let's just adjust this properly. There we go. All right. So we get into the window, ticks through it just a little bit, does not get to that lower level, and then the market continues to move up. So we see example time after time how that Fibonacci window is going to be considered the ideal market pullback in order to continue a trade in the trending direction. Now, this one is just shy of the window in a downtrend, and this one here is perfect. It gets right into the window, bounces off of that window. Let's take a look at this. Doesn't quite get to the window. This may not be a pullback that you'd want to trade because it's part of a bigger move. Now, this is another thing. If the price doesn't get to the window, is it really considered a pullback? You could say yes, you could say no. So let's go from the top down to the bottom. We're going to see the same sort of thing. We don't get the pullback, and the market just continues to move down as part of a bigger move. So what we're seeing is a bigger move with a bigger pullback. So the pullback's a little more significant. It gets to the bottom of the window, and then it continues to drop down. So if there's any question as to where the ideal pullback is, it is going to be that Fibonacci window between the 38.2 and the 61.8. If I'm looking at a pullback that doesn't get to the window, I'm going to consider it as probably not really a pullback, and I can continue that trend. If it gets beyond that window, if the pullback gets up and beyond that window, it pulls past and through that window into that first third of the market, I am going to be looking at a market momentum reversal. I'm looking at the market to potentially look to be changing directions. So what's going to happen? Get my pen out again. If I'm looking at a price that moves up and then pulls back and it gets low, this is the third, and we get low, generally what we're going to see is either the price is going to continue to move down, or it will make a pullback and then move down as that momentum is starting to shift.